Hi and welcome to the Market Alert for Tuesday, the 29th of June 2021. So the main headline for yesterday, Dow dumps, Nasdaq jumps as bonds and Bitcoin bounce. Is it a dead cat bounce or a new bull market? Well, we'll soon find out, and I'll show you how to actually measure that to verify whether it is the old dead cat or not. Other news, futures stall at all-time highs. Focus turns to jobs data. Yes, we've got the non-farm payrolls this week, and also there is other news as well, which I think is here. Yep, key events. We've already looked at the news yesterday, but this also mentions, obviously, along with the non-farm payroll, the ISM manufacturing index. We've got Thursday's employment, and the Friday, the big one. There are several speaking engagements from Fed officials this week, including President Williams on Monday, which we've already had anyway. So just to bring this one into focus, really, the ISM manufacturing index. But the main thing, of course, which is what we've already looked at, is the non-farm payrolls. Now, for today's news, we've got the criminal out. She's out at 2:40. Lagarde is speaking just after the Dow opens this afternoon at 2:40, and we've also got US consumer confidence. And then, like I say, the market is going to start thinking about Friday for the non-farm payrolls as well. So if it goes quiet, that is the reason why. On other news, implied volatility is coiling sideways, as we can see here, down at 12.52, which is not bad because it only increased from 12.34 to 12.52. So the volatility is still down in the lows, again indicating that we are due a correction, but we don't seem to be getting one. Every attempt to correct, you will see we just get a small spike, and then within a matter of a couple of days, that market is turned around and brought back, as we can see here from the Dow. We started off with a correction, and then immediately this was brought back with a 900-point bar, and then prices have been heading higher ever since, until yesterday when the market opened and sold off down to the 20-bar and 5-bar moving average, but has found support overnight. So once we got to 78, the market's struggling a bit. Now, as to the question of the dead cat bounce, watch the 89% level if prices start to move back up and trade up to this level. If they fail at this area, then watch out, because that's where you will get the market moving to the downside. You can see here we had a double top as the market came back, but also again, you'll actually see it here. This is perfect. So from here to here, and then projected back, brought you back to the 89, and then we saw the next correction to the downside with a minor one in between as well. So watch this area in the Dow. Yesterday, the market, the pajama traders, and for those of you that are new, the pajama traders are the New York traders that get up early in the morning before the Dow opens and trade the futures markets, and the pattern is that they generally bring the market back. And because most people are still working from home, they're now known as the pajama traders, and they bring the market back to the upside. They'll play the game to the upside, and then this allows those that are selling the physical stocks in the cash market to actually offload. And yesterday they overcooked it, and you can see there that each time the market rallied to the 20-bar moving average, prices failed until we got through convincingly, and then we get the retracement, which I'll just mark it in here for you. So from this low to this high projected back down, you will see, and just draw that in there, that we came back to 78%, and you'll see the buying there as well, as prices then were moved to the upside. Now overnight in the 5-minute DAX, you can see that prices are sitting close to, I'll just squeeze this up a bit, the close of yesterday, just breaking through yesterday's 200 MA, breaking through the 200 MA with some professional buying there as well. And then we've got the DP above. Now it's always worth moving to a sort of intermediate time frame, like a 30-minute. This way you can get a real picture of what went on yesterday. So you've got the drop, you've got that same 78% retracement, the return back up, and now you can see where you are with regards to target. So yesterday's close is here, yesterday's high, which we can see over here, which is quite a distance up to this level. But the key here is for the pajama traders to get the market above the DP, and then you've got the R1 there as well, and the high. Failure to do this, and we see a resumption of the downside, then in this time frame of the 200 bar moving average, but across all time frames the low will be very important, because if that's taken out, we go back to the daily, you will see that on the downside we've got a close below the 5 bar moving average, and then down to 33,941 in the fibs in the bigger time frame there. And in the DAX, let's just pull this one up for you, and we can see that we've got a similar picture. Again, dead cat bounce scenario would be coming back up to 89, failing, and then moving lower. Now, we didn't get the same pattern in the DAX as we got in the Dow, because the DAX actually was stronger than the Dow, which is a rare event. And instead of where we got the corrections, it came back and went through, and again came back and went through, and that was the high that tied in with the 89 in the Dow. So prices actually move lower, and that 900 point bar in the Dow is this one in the DAX, which was 450, half the amount, and prices have just traded sideways there. Again, we can see a bit of strength overnight, but the market is still currently below the 5 bar and the 20 bar, but we are getting sort of rising lows there. So on the upside, these are your numbers, and you'll see how yesterday I used this area in the morning trade on the buy side, which is in more detail in part 2 of the market alert. So there we can see again, price is showing a bit of strength there. Let's move out to a bigger time frame as well, just so that we can see yesterday. This is a 30-minute chart. We were up for 30 minutes and then we reversed. Next hour and a half we were down, and then a bit later on, after the market had traded sideways for an hour and a half, we see prices trading back down to the S1 before we got the mid-morning bounce. And if you want to see where the bounce came back up to, again, if you go from here down to here, you will see we ended up in the 78% retracement area there as well. And this is why I do like these sort of bigger intraday time frames, because you can get a clear picture of where the market is actually trading. So I will keep these charts on while I'm looking or trading a 2 minute. I can use that then to fine tune the entry place if I'm not using the automatic signals, and also step back and see where the market will likely to trade to. So now, unlike the Dow, you can see that the DAX is coming off yesterday's low at the moment. A very important area, as you'll know from previous market alerts, that the low in a bull market, where we've got a 13-year bull market going on at the moment, engineered or otherwise, it doesn't really matter, but we have. So they're going to try and keep the market moving to the upside, keep the illusion alive. We can see we're at yesterday's close. We've got a 200 MA in the way, which proved a resistance area earlier on or later on last night, and also overnight. We need to get through the DP, which coincides with a BRN, a big round number. We need to take that out, and then we've got the R1 and yesterday's high as well, which you'll see there. So in the smaller time frame, we have a look at the 2 minute for yesterday. We had a signal and the market moved higher. Now, I'm not going to cover this here. This is just to give you an idea of what to look out for today. A quick overview of yesterday in part 2. Both of these trades are taken apart in a lot more detail. So this is again just a quick overview and how the trade was managed. So we can see the market opening and then screaming to the upside, which is no surprise. Spoke about this yesterday. The only thing that I was surprised by was in the futures market, they actually moved the market lower at 7 a.m. and then we see the market being brought back. Let me just take that out here. You'll see prices coming all the way back through 89 on this occasion. We found a bit of support in this area, but then continued lower to make a double bottom. But the afternoon also following the Dow. Let me just get this, clear it up a bit so we've got a bit more space. There's the mid-morning rally, and you can see how the market held at the S1 there, and then in the afternoon the market moving lower in the DAX there, and then the same overnight. You'll see just inside of the 30-minute activity what's going on at the moment. There's a few spikes in volume, but not a lot at the moment. We're 20 minutes away from the futures market opening. So let's have a look at the metals. Quick look. The Basel III rules are supposed to be implemented now from midnight last night. It's going to take a while. I don't know how the market's going to react to this. It basically means that there is no bank that can allow for unallocated metals, so particularly gold. They can't actually have the same number of derivatives unless they've actually got the physical gold. Is what the gist of Basel III is. But there is a great article on Zero Hedge about this if you're interested. Will it stop the manipulation of the silver market? Who knows? That's the question for me. Will it make any difference? I don't know. But the only thing I will say is that overnight silver in the daily chart there is moving back towards the upside. And I would be inclined to take this high and this low and just measure, just to see if the market's got any more, how it will measure the strength on the upside. Let me just change, it's here somewhere. We could do with a 38 and a 50 in this one at the moment because we're so far away on the daily chart. So from this high to this low, this gives you that 26.50 area really. So it's only 50 cents higher than where we're trading to be at resistance. You can see they sold off when it hit this level last time. But yesterday the market moving up and then coming back and sitting on the 62% retracement for silver there. In a smaller time frame for silver, let's go for the 30 minutes. You can see that they've brought this back up overnight, back above the DP and the $26 level for yesterday's close there at the moment. A bit of selling there at the moment though. I can see that a very high volume and stuck at that 26.07, higher than the previous bar. And meanwhile in the dollar, trying to move to the upside as well, obviously inverse related, and trying its best to get above that 91.97. Again, Friday is going to really determine what the dollar does depending on the unemployment figure. So like I said before, expect the market to go quietish during this time. Okay, that's going to do the sort of quick overview and roundup. Part 2 is going to cover the trades in depth from yesterday, which I've also put in the members section of the site. So they're already pre-recorded, but I'm just going to add them into this video. So with that, this ends the main part of the alert. So I'll see you in part 2. Before we get into the trade, let's just have a look at the background. We can see that the futures market opened here, which is an hour before the cash market, which is this bar here. There was weakness in the market. Prices found some support at the close of Friday, and then when it broke this, it continued to move lower. Now it broke the 200 bar moving average as well, which is the black average there. We're also below the 20 bar moving average and the 5 bar as well. Prices find support at this psychological level, but then they break this and they trade in a range between the daily pivot, which is the main target for a market. Anything trading above is bullish, anything below is bearish. So the market's in this sideways range, waiting for the cash market to open. It opens and it moves sharply to the downside. So let's just fast forward this. You can see this huge buying in this bar here as the market is brought off the lows, but still below the 5 bar, the 20 bar, the DP and the 200 and the previous day's close, which is the Friday of the previous week. So as the market tries to find some sort of balance here, the fight continues. and we see another high volume bar also coming off the lows. This is green, indicating that there is further buying coming into the market. Prices once again trade sideways, and the first sign of any sort of strength coming back to the market is a close above the 5-bar moving average, which is what we see here. Heading back to that DP level, which is a magnet, prices then trade to this. They also close above the 20-bar moving average as well, again on an increase in volume. So all these things taken into account, we have a signal, and then the market starts to move to the upside. Now we hit resistance obviously at the entry price because this is a psychological level, and we can see over here that we've had that resistance earlier on in the trading session, in the pre-market as it were. So in order to get through this, prices need to drive strongly, and that's what we're seeing here. And you will see the volume increasing as well. So we've got buying coming into the market, driving prices to the upside. I'm just going to mark the trade up again. Prices have gone through the scalp, and the scalp is the first profit target. And this allows us to start moving the stop to break even, and that's exactly what I've done here. I've removed the stop off the chart, which I'll just wind back so you can see. So I've removed that. This is to show you that I've moved the stop to break even. Around 20 points is fine, and we're through the resistance that we had with the 200 MA and Friday's close as well. So now we can also just trail the stop, and I'm using the 5-bar moving average to do this. You can see this is at the entry price, so the stop can be moved to break even to reduce the initial risk. Now it's just a matter of watching the markets as long as it's making rising lows, which we're seeing at the moment. We've got our targets up here of where the market stopped on Friday. We're likely to meet with some resistance here. So again, let's just move forward. Immediately we can see there's some profit taking coming into the market. I'm now looking at the daily chart. As you will see from the market alert, I always start with the daily chart. I like to know where the bigger picture is. It's all right trading a 2-minute to go in and scalp and take profits, but you need to know where you are in the bigger picture. It's very, very important to know this. So I'm having a look at the daily chart whilst prices are moving up just to see if I've got any resistance. I can see that I've got Friday's high where there could be some resistance, and that's already marked in the chart, but I've actually just put that on there as well. And there you can see that high from Friday and where prices are at the moment. Also, you can see there's an increase in volume, so the traders are still active at the moment. We complete this bar, and this is a very interesting bar because we've got some selling pressure here, and we'd expect this around the high anyway. And what's going on here is there's obviously some traders are selling into the market as it rises, because that's generally what the pros do. They don't wait for the market to turn. They're the ones that create the turn by closing their trades, getting out of the trade, and then the market reversing and coming down as the lack of buyers is shown in the markets. So in order to move high, we've still got to take out this high. The good news is, again, we're still getting these rising lows, and we took out the high of this bar as well. So let's just move forward, and we can see now we've just gone through Friday's high, and again you're seeing that increase in volume. To drive through these sort of areas of resistance, you need to see new buying coming into the market, and that's what we're seeing here. So now prices are going to have a breather, and what we're looking for here is the high to become, Friday's high to become a support level. And again, moving over to the daily chart just to see where my next resistance is, I can see it's at this fib retracement, which I drew in from this high to this low projected back, and that's where it gives me that. That's because I haven't got another low to draw back to, so I've just used this bar. If you look at the 23rd, is it the 23rd? It's a Monday. Let me just go back a bit here. 25th, the market alert for the 25th, you will see why I actually use this as more detail in that market alert. So once again, I've had a look at the longer term charts. Again, I can see I've got some more potential weakness here. Market's trading sideways, but it's still trading above Friday's high, and again making those rising lows. So prices then start to move up once more, and now we've got to tackle the R1 and this high and the psychological level, and once more we want to see the volume increasing to drive this, and here we are, we're starting to see this. We're stuck at that 89% retracement as well, and again you can see we've got that increase in volume going through. Now what I'm doing here is having a look on this chart. I've got the high, because I've gone through the high of Friday, which is this bar here. I'm looking to the next high as well to the left, and this takes us back to Thursday, Wednesday of the week before, and I'm going to use this high as a potential profit target. So what I've done is just bring this down in the chart with this line here. I've used the line tool, which the tutorial's about, and I've actually marked it up here. So as the market approaches this area, I'm going to look to see if there's any more weakness coming into the market. One thing that is starting to show, again you can see here, is a lot of volume here, and this market's not actually making much progress. This is about 90% of the previous bar's volume. The range is less, so there must be some absorption going on here at the moment in an attempt to try and move the market to the upside. So prices come back, they have a look at that psychological level, that BRN as they're called, big round numbers, and then the market comes back to the 5-bar moving average, but then manages to move back above it. And the only reason I didn't take profits at this level is because I've got this one marked up here from the daily chart. I'm just having a look to see if the market's got the strength to move up to this area. It attempts to do so. I get an increase in volume, but I see prices have come off the high of this bar, so there's got to be some selling in there when this price bar completed. So now I'm looking to see if we're going to get to this level. I'm back to the daily chart just to have a look, see how it's looking, and the issue I've got now is the high of this bar, because there was some selling in this area. I know that because of the increase in volume, and I'm watching the 5-bar again, and you'll see prices coming back up and hitting this high, which I've marked in now. That's a double top that's happened there. We're not quite getting to the orange line there, which is the Wednesday before's high. So prices start to trade sideways. They came down again back below the 5-bar moving average and attempting to move back up again. We've got a problem here. The volume is dropping off. There's a lack of interest in the market. So as the market comes back through on this occasion, it comes back through the 5-bar moving average, decide to take the close out the trade there and take the profits off the table for a 59-point profit. And as we move forward, you will see prices continue to move to the downside there, coming back below the psychological level and the R1. So it was the right thing to do there. Okay, so what we've seen here is the trade in action, from how it came into being to moving the stop to break even, to then trailing the stop up to this level using the 5-bar moving average. The only reason I didn't take the profits as the market came through here is because we've got this high from the Wednesday before in the daily chart, just to see if the market had got the strength to break through to this. But what was noted here is that the market was starting to fall off as far as volume is concerned. So as the market came back, took the profits off the table, and then prices continued to move lower. In fact, they actually traded all the way back down to here as later on in the morning. So this is the afternoon session. We're just kicking off. A quick review from the other trade that we did. We've still got this high. Market's just trading above the previous day's high, i.e. Friday's, but the high that we had from the Wednesday, which is a follow-on from the morning trade video that recorded earlier. So yeah, the market came to life, a lot of volume there, and then we started to make our way down. The Dow was moving sharply to the downside, moved 150 points, and the DAX had barely moved, so it didn't really want to go down to begin with. And here immediately I can see that I've got some sort of buying coming into the market, a lot of volume, and more than the previous bar as well, and the range is less, so there's some buying pressure coming into the market there, which is always an interesting one to see. They'll do anything they can to try and hold the market, but then it comes back under a bit of a pressure. And again, you can see here again we've got a huge amount of volume once more, again showing that they're trying to hold the market at the moment. On the downside, we've got the close as well as an area for profits, target area, and also the 200 MA. So again, we see prices moving sideways. Again, we've got another buying bar there, but we're not closing above the 5-bar moving average at the moment, and we're below the entry price. Prices eventually come under a bit more pressure. Again, you can see the selling coming into the market now here, and we're at the scalp. So we've got the stop at break even now, just to see, to reduce the risk. So trading down to the close, I'm having a look at the daily chart. There's nothing in there that's really of interest, but again, watch the volume now as the market starts to come back. And you'll see at this point here, you can see there's a huge amount of volume. It's hit the close, and given that this is the case, I decide to take the profits at the scalp. And the reason is this huge amount of volume coming in at the close, which is where the market's likely to find support. And that's precisely what happened as they then came back. And I'm going to fast forward now because the market traded sideways for a good 30 minutes before it eventually did break to the downside, but it took a long time. And you can see on these occasions where the market's come back to where I'd actually taken the profits. So there you'll see eventually the market taking out the close, but then coming back once more. Again, not too dissimilar from the area of where profits were taken. But like I say, eventually the market does break, but you've got to sit through all of this sideways, waiting for prices to move to the downside. So again, I'll just fast forward. You can see them buying back in here as they did here, and just holding. So that's why it was a quick trade, which is, as you'll see there, eventually the market breaks to the downside and goes down to the DP. It did continue lower than this. There's the selling as we went through and took out all of the stops, but it did take a good half an hour or more to get through this sideways move before prices moved to the downside. And correct, easily could have moved the other way back to the upside as well. So we traded what we were seeing at the time, and that was the buying coming back into the market, taking those profits. The market was then hit by selling, and then it traded sideways until eventually it broke. In a bigger time frame, it's not a problem, but in the 2-minute time frame, that's the way I traded this on this particular trade. Okay, that's it for this alert. If there is anything to notify you about, I will do, but